Welcome to Efficient Tax's video on outputs. In this video, you're going to learn about the 6 different output results that are available for analysis and decision-making from each Efficient Tax Portfolio Optimizer analysis, along with the impacts that designating shares to sell will have on a set of results. The sections include Summary of Optimization Ranking Results, Tax Lot Graph Results, Expanded Optimization Ranking Results, Alternate Share Tax Loss Harvesting Results, Impacts of Designating Shares to Sell, and Results History. An Efficient Tax Portfolio Optimizer analysis has many inputs and lots of outputs. In order to help make the results easier to understand and use, we first present a summary report that can immediately be used for trade execution decisions and for printing. Then we also give users more options to view results in greater detail and in different versions. So let's get started with the summary of optimization ranking results. We'll run a quick analysis just to get us there by clicking the Portfolios tab. Then we'll select a portfolio for analysis. After selecting all the tax lots within a portfolio and clicking the Create ETPO Analysis button, an Efficient Tax Portfolio Optimizer analysis is prepared. The analysis preparation process gathers tax lots, prices, and other default values, and then populates them into the input screen, ready for processing. Now we'll click the Process ETPO Analysis button and we'll wait briefly for the analysis to be completed, keeping you up to date on the progress of your analysis being processed among other customers' analysis requests being processed in queue. This is all done while encrypted in the cloud. Here we are at the initial results set. We recommend putting a serious amount of thought into the inputs utilized, especially those regarding stock and portfolio performance expectations. However, the result set can be generated as quickly as we just did it if an investor is already comfortable with the inputs being utilized. We first show you identifier information regarding the analysis just completed, like portfolio name and investment horizon chosen. An Efficient Tax Portfolio Optimizer analysis has investors sell tax lots first that lead to the greatest extra after-tax wealth over a chosen time horizon, while keeping those tax lots with the greatest after-tax return potential remaining. The results set ranks in order of value-added attractiveness, or alpha, partial or whole tax lot shares recommended to be sold in the optimization process. Starting at the left of the summary report are links to the individual tax lot graphs that display the tax economics of each individual subject tax lot. They can be accessed simply by clicking the link to each one. We will wait to review the graph results in the following section. Next, moving to the right, we have individual tax lot information, including a company's ticker, its name, the number of original or remaining residual shares, the date of purchase, and the cost per share. An original number of shares can be reduced by the partial sale of a tax lot. This can be a result of a shares to sell tax lot designation or position designation, or also as a result of some but not all the shares of a profitable tax lot having been sold via tax loss harvesting. Remember, you can learn the meaning of any output by hovering the cursor over its label like this. Next is the maximum strategy for each whole or partial tax lot. A recommendation could be to either hold, sell now, or wait until the tax lot reaches the long-term status before selling and reinvesting, if the tax lot has been held less than 1 year. The latter really means waiting to reevaluate when the stock goes long-term to see if its price is still sufficient to justify a sale. Next, we have shares to sell, which briefly means the number of shares recommended to be sold or designated to be sold in sequence within the optimization process. Please read its tooltip and definition in the Outputs Explained document, as this is a very important primary output of an efficient tax portfolio optimizer analysis. A user may also add or change a tax lot designation in the output cell, which also can be an input cell, and rerun an analysis from here without going back to the input page. It's not unusual for partial tax lots to be sold due to a tax loss harvesting process or as a result of a sale designation. Therefore, we keep track of any residual shares and their associated cost basis remaining for each tax lot that will be included in the remaining optimization process. Since each tax lot can have only one shares to sell designation at the tax lot level, and an individual tax lot may be included in the ranking process more than once as a result of being split up, we only allow an input for a tax lot designation from the results page on the first or highest ranking iteration of a tax lot within the shares to sell ranking sequence. We otherwise display, like this, the total number of shares to sell associated with an individual tax lot that may have accumulated within the ranking process. This is so users can quickly identify the total number of shares to sell from each tax lot for trade execution ease. Further to the right is the accumulated gross proceeds. This is the sum of all shares to sell in the ranking process, accumulated from each tax lot under consideration, along with all of the tax lots ranked higher in the optimization process. This makes it easy to know the market value of all the tax lot shares to sell ranked in the optimization process. Next, we have the associated accumulated tax liability, and then finally, the accumulated net after-tax proceeds. These values are generated to help investors know how many shares out of which tax lots should be sold and in what order in order to achieve either a desired before and after-tax proceeds amount. The entire summary ranking of shares to sell may be viewed by navigating within the window by either using the side navigation bar or, if your computer allows, by clicking in the window and rolling up and down. Finally, in the upper right-hand corner, a print version of the summary report is available by clicking on the Print Results page in the following manner. Now let's take a look at a results picture in the form of a graph. This can be done by clicking on the View Graph link at the furthermost left column under the heading Single Lot Graph. Once that is done, we can see a vibrant color picture of the after-tax economics of this individual tax lot. The first graph depicts the tax lot ranked highest in terms of which full or partial tax lots are recommended to be sold first, second, third, and so on in an optimization ranking process. The display of a graph may be interrupted by an alert message if a stock is so overvalued in the short-term window and high above its highest justifiable price that a sale is currently recommended. In the example we are displaying, we have an unrealized loss being realized, so refer to the Tax Loss Harvesting Education video for a complete explanation on how to interpret this graph. Now we will look at the various outputs resulting from an ETPO analysis, starting with the upper left-hand corner where we can see the time horizon that was chosen on the input page, in this case, 4 years. We can toggle between the 3, 4, and 5-year horizons and see each of their pictures as well, as we're doing here. However, it is very important to remember that an optimization ranking is only calculated for the investment time horizon chosen on the input page. Each time horizon has its own unique set of price targets and price-sensitive performance expectations. Therefore, ranking results may change materially depending upon time horizon and the price targeting options chosen. The timing and sequence of the realization of gains and losses in an optimization process can make a big difference in whether a loss is available for any particular profitable tax lot to be recommended to be sold within a ranking sequence. And it can change the economics and the picture, therefore, of a tax lot, depending upon which time horizon is chosen. So the changing of a time horizon here allows users to view the after-tax economic impacts of each tax lot over various time horizons within an individual time horizon's optimization ranking. But it cannot forecast the economic impacts across different optimization time periods, principally because of the potential difference in realized gain and losses values resulting from each unique sequencing of tax lots to sell within each optimization process. However, when assessing an individual tax lot as a sale candidate, knowing a sale can add after-tax value over multiple time horizon assumptions can increase the confidence in the value of a current sale. Now let's move down below where we rank from best to worst the decision choices an investor has with this individual tax lot, given all the various inputs provided. Those choices can be to either hold the tax lot out to the end of a chosen time horizon before selling and paying taxes, selling now and reinvesting, or waiting until the long-term window to sell and reinvest. In this example, the highest value option is to sell now and reinvest. The next would be to wait until the long-term window before selling, while the least advantaged choice would be to hold. That's because we have a tax lot with an unrealized loss held less than 1 year, and selling to capture a short-term loss is more valuable than waiting until it goes long-term to realize a long-term loss. In the chart, we can see that the cost basis is above the market value. Down below, we can see that there is a negative simple return. In terms of relative performance expectations, we can see that both the new purchase and existing tax lot after-tax return potential are subpar compared to the return potential of the reinvestment shown here. A sale is recommended when the combination of the tax savings value of a loss compounded over time through reinvestment and the relative return potential of a current tax lot as compared to a reinvestment rate of return can yield a forecasted significant amount of after-tax extra return and alpha per year, such as we have here. A sale can even be recommended with a loss when an existing position has a greater forecasted return potential than that of a reinvestment when the extra value of a loss more than compensates for that over time. Looking back up to the right of the after-tax decision rankings, we display target market values, adjusted lot cost basis, and the highest justifiable price. Down below this section, of course, is the graph. Again, please review the various graph videos available in our education library for a complete description of these pictures. Down below the chart are all the various key outputs, and then below all the outputs are all the inputs that were used. For a thorough understanding of each output, please review the tooltips available for each one and the Outputs Explained document located in the library. Now let's move on and look at a full Efficient Tax Portfolio Optimizer analysis results set by showing all columns. We'll start by clicking the Back to Efficient Optimizer Analysis Results link. We'll now click the Show All Columns button located above the results table. Once this is done, we will see a wide table that can only be fully viewed by using the navigation bar at the bottom of the table, like this. You will see that not only when we move the navigation bar that more columns are visible to the right, but also the identifying tax lot information and view graph links remain static on the left. These are always visible in order to ease data identification. In addition to the summary information we displayed in the previous page, which one may navigate back to, we also include all the other important outputs related to the potential impacts of each partial or full tax lot sale. We will briefly identify each one for you, but we'll count on you to review the tooltips available and the Outputs Explained document located in the Education Library for a complete understanding of each output. Then we will take a few moments to review the optimization results. Now let's start by identifying all the other Efficient Tax Portfolio Optimizer analysis outputs, starting with the price assumption. we default current delayed market pricing as an automatic input for the price assumption in the input page, supplied by Bar Charts Incorporated. If a more current price is desired, or a simulated price to test what price would justify a sale, it would have to be provided by a user independently on the input page as a position input. To the right is the market value of the original or residual shares remaining of a tax lot under sale consideration. An original number of shares purchased of a tax lot can be reduced due to sale designations or as a result of any tax loss harvesting. And then we have the total after-tax value of the original or residual shares. Remember, you can cursor over any heading and find its definition. Next is the simple return, which is the market price divided by the cost per share minus 1. To the right is the maximum strategy, which we referred to earlier in the video when reviewing the collapsed results set. Then we have the very important alpha value, or what we refer to as the after-tax annual average recommendation advantage. This value is only positive when there is an advantage to selling. The higher this number, the higher a tax lot is recommended to be sold in the portfolio optimization process. Then to the right is the existing tax lot after-tax IRR. This compares the current after-tax value of a tax lot with its future after-tax value. Tax lots are recommended to be sold first that generate the greatest excess return by doing so. Then next in sequence, those that have the least after-tax IRR remaining, resulting in tax lots with the greatest after-tax return still being held. One can see that as we move down the ranking, all the Sell Now ranked tax lots are sequenced in descending order of after-tax annual average recommendation advantage, or alpha, to make sure tax lots are sold first that the most after-tax value added is forecasted to be achieved. And then the ranking switches for all non-Sell Now tax lots to those being sold first with the least existing tax lot after-tax return potential remaining. Please remember that tax lot or position sale designation affects what is sold first in the ranking. A descending after-tax annual recommendation advantage ranking may be interrupted by a tax lot in sequence with a higher alpha value. This can happen if a tax lot that is recommended to be sold higher in the ranking process is forecasted to generate a realized loss that is then available to be harvested against a lower-ranked profitable tax lot whose higher alpha value would not have been as high without the availability of a loss to harvest against its gain. To the right is the after-tax annual return on taxes. Taxes can be viewed as an investment or a cost of capital redeployment. If a deferred and accrued tax liability of $1 becomes due because of the sale of a fully valued stock, and an extra dollar in after-tax return can be made by investing in something with materially more upside, then that equates to a 100% return on a tax. If that can happen over a 3-year time horizon, that would equal approximately a 33% annual return on that tax investment. The higher this number, the more compelling a sale decision should become. Then we have the most important output value, the shares to sell number, depicting the number of shares recommended or designated to sell as a result of all the inputs. This value can be converted to a designated tax lot sale, or if already designated, may be modified and an ETPO analysis rerun right from the results page. Only the first time a tax lot is included in the ranking process do we allow the output cell to be a tax lot sale designation input cell. Subsequent sales out of the same tax lot will be read-only outputs. To the right is the action pending notification, which alerts users if we detect that the sale of an individual tax lot may subject an investor to the wash sale rule. Next is the new purchased after-tax IRR, which calculates the after-tax return potential of a stock if it were purchased at the inputted market price compared with a forecasted price. The difference between this value and the existing tax lot after tax value is the tax impact of any unrealized gain or loss on an existing investment. Next, we have the realized short-term gain or loss value. The value of this number on the highest ranked tax lot to sell in sequence will equal the value inputted on the input page, further updated down the ranking, with the impacts of selling any additional tax lots held less than 1 year included higher in the ranking process. Next is the realized long-term gain and loss value, treated the same way as the short-term value except for tax lots held more than 1 year. The next two columns indicate the amount of unrealized gain or loss on the number of original or residual shares of a tax lot, identifying whether it is from a short or long-term holding. Next, we have the shares to be sold gross proceeds. Then we have the sell now total tax lot tax liability, representing the total tax lot liability of all original or residual shares of a tax lot, if less, regardless of how many shares are included in the shares to sell number. Next is the recommended shares to be sold tax liability, or in other words, the tax liability that would be due if the number of shares in the shares to sell column are sold. A positive number represents a tax liability. A negative number indicates a tax savings value. To the right is the accumulated realized short-term gains. It is the sum of the realized short-term gain or loss value inputted for this particular tax lot, which includes the impacts of any sales ranked higher in the ranking process, plus or minus the amount of realized short-term gain or loss that would result from the sale of the number of shares of a subject tax lot displayed in the shares to sell column. If the tax lot is a long-term holding, this value would be the same as the inputted value. The next item, the accumulated realized long-term gains, is treated in the same manner as the accumulation of realized short-term gains, except it is based upon long-term gains and losses. Next, we have the accumulated gross proceeds. It is the sum of the market value generated from the sale of the current tax lot plus all of those sold higher in the ranking process. If an investor is trying to raise a particular amount of sale proceeds, then selling the number of shares in the shares to sell column for the subject tax lot, plus all those ranked above, would allow the investor to generate those gross proceeds in the most tax-efficient manner. To the right is the accumulated gross tax liability. And then the number an investor would want to focus on if they are trying to raise an amount after tax, the accumulated net after-tax proceeds. It may be that an investor needs to sell $55,000 worth of stock in order to have the cash to make a $50,000 purchase while needing to reserve the $5,000 to pay any associated taxes when due. It is important to recognize that if the accumulated gross tax liability value is negative and their associated tax savings value won't immediately take effect by reducing an imminent tax payment, that the accumulated gross proceeds value should be the guide as to how far down a ranking should full or partial tax lots be sold in order to raise a desired amount of cash proceeds immediately spendable. Then further to the right we have the absolute sell now versus hold after tax alpha. This value represents the difference in forecasted after-tax value expected by the end of an investment horizon, net of all benefits and costs of selling a tax lot now and reinvesting after-tax proceeds of a particular tax lot compared with holding on to it. A negative number means one would be better off by holding versus selling by that amount. A positive value indicates one is forecasted to be advantaged by selling and reinvesting. This absolute value is not affected by either any minimum compound selling advantage, or rather alpha requirement, or the risk premium adjustment inputs. Please read the tooltips available for each of these items to add more clarity. The next column is the accumulated sell now versus hold after tax alpha. It is the value of the absolute sell now versus hold after tax alpha of the subject tax lot identified in the optimization ranking, plus that of all such values of those tax lots ranked higher in the optimization process. Finally, we have the tax loss harvesting matching shares. It is the number of shares of a profitable tax lot that may be sold without incurring any cash tax liability. This is a result of being able to offset the gain of a short-term holding with that of previously realized short-term losses, or emanating from tax lots anticipated to be sold higher in the ranking process. Or likewise, the number of shares of a profitable tax lot held more than a year that may be sold utilizing realized or anticipated realized long-term losses. These same share number values will reside in the shares to sell column. To add further clarity on how to interpret an ETPO analysis, we would like to review a couple of more things. We want to take you first to the after-tax annual average recommendation advantage to show you a few things. Generally speaking, this ranking is in descending order in order to accomplish selling tax lots first that generate the greatest alpha. That can change, as we can show in this example, when in the absence of a loss to harvest, a tax lot would have a lower or zero alpha number. But as losses become available from the anticipated sale of tax lots ranked higher in the optimization process, as we can show here, then a higher alpha opportunity is created. Another item to see is that because we have created the opportunity to change a tax lot sale designation from a results page and rerun an analysis, we only allow for an output cell to also be an input cell the first time a tax lot is included in the optimization ranking. Down below, when you see an output for shares to sell that is display only, it indicates that one or more shares of the same tax lot has been ranked higher in the optimization tax lot selling sequence. You will notice that when we cursor over the display only cell, we can see how many total shares of this tax lot, including the shares displayed here, are ranked to be sold so far in the ranking sequence. This will allow a user to know the total number of shares to sell of each tax lot accumulating down a ranking, again, to facilitate trade execution. Next, we want to navigate again over to the right end of the display to show you the tax loss harvesting matching shares. This number indicates the number of shares able to be sold that there are sufficient matched losses to harvest and pay no taxes on. As you can see, this same number is used in the ranking process, and as such is displayed in the Shares to Sell column. The final column is only utilized if a user clicks the Rerun Analysis Using Alternate Shares button, whereby a new analysis is processed, making use of special tax loss harvesting opportunities at the very end of a tax year. This column contains the number of shares that may be sold by either offsetting long-term losses against short-term gains or short-term losses against long-term gains. This is for final stock sales for a tax year as allowed. At the very end of the year, any excess or residual long-term losses remaining after all realized long-term losses have been offset against all realized long-term gains may be offset against any excess short-term gains, after all realized short-term losses have been offset against all realized short-term gains. Again, this feature is only activated by clicking the Rerun Analysis Using Alternate Shares on the Results page. This should be done only to evaluate any very last tax lot sales of a tax year. We do this as a precaution against users inadvertently exposing themselves to short-term capital gains tax rates upon a sale, thinking that long-term losses would otherwise be available to harvest against a short-term gain, only to subsequently sell additional profitable long-term tax lots that then use up the long-term losses that were otherwise expected to be available to avoid a tax on the sale of a short-term tax lot that are no longer available to do so. Unless a user clicks the Rerun Using Alternate Shares button, as we are doing here, these values will always be zero and won't otherwise affect the shares to sell values. The results set stops running when any anticipated additional sale in a ranking would expose the investor to a tax on a previously ranked alternate share tax loss harvest due to the loss that was utilized higher in the ranking process, being instead harvested against a matched tax loss harvesting sale. Finally, we wish to quickly show you how designating either a specific number of shares to sell within a single tax lot or among a position made up of more than one tax lot impacts an efficient tax portfolio optimizer analysis. We're going to go to the Portfolios tab and we'll select a portfolio and then click the Select All box. But before we create an ETPO analysis, we will designate the selling of 100 shares of an individual tax lot of 1,000 shares of Pepsi. Then we will click the Create ETPO Analysis button. From the input page, we are also going to designate the selling of 25 shares of IBM, made up of a position of 3 different tax lots totaling 75 shares. We are also going to navigate down to the individual tax lots that make up all the positions displayed above and change our individual Pepsi tax lot sale designation from 100 to 200. And then click the Process ETPO Analysis button. Once getting to the results screen, we're going to show you all columns so we can review the ranking logic for you. Here, you can see that we first sell the 200 shares of Pepsi that were designated to be sold out of its single tax lot, even though it is otherwise still a hold from a future performance expectation perspective. Then we have 15 of the 25 designated shares of IBM being sold from its tax lot, with the least existing lot after tax IRR. The next 10 shares will be sold from the next IBM tax lot, with the next least return potential remaining. The remaining residual Pepsi and IBM shares are ranked to sell further down the ranking. And finally, you may also change an individual tax lot sale designation right from the results page and rerun an analysis, as we're doing here by increasing the tax lot sale designation on Pepsi once again from 200 to 300 before we rerun the analysis. And now we would like to take you to the ETPO Analysis History tab, where you will be able to view any analysis previously processed and not yet manually deleted. The results look the same, except that you may not rerun an analysis from here. You will have to go back to the Portfolios tab and select a portfolio in order to process a new analysis. Also, from the History page, you may click the Share button next to any results history in order to allow one of our efficient tax customer service professionals to view a particular result set that you may have a question on. None of our efficient tax professionals, nor any of our other employees, are able to view any customer's portfolios or result sets unless a customer shares this information, as the information is always otherwise encrypted. And we will only be able to view a result set until a user decides to unshare it. Well, there you have it, a detailed review of all the outputs of an efficient tax portfolio optimizer analysis. In it, you have learned about the 6 different versions of output results that are available for analysis and decision-making that come from each efficient tax portfolio optimizer analysis. They include Summary of Optimization Ranking Results, Tax Lot Graph Results, Expanded Optimization Ranking Results, Alternate Shares Tax Loss Harvesting Results, Impacts of Designating Shares to Sell, and Results History. We hope this detailed video has been helpful. Thank you again for watching, and good luck in the markets.